Hi, I'm Allison Hawkins with the Alliance for Charitable Reform, and I'm here with Evan Liddiard, who is a CPA with Urban Swirsky and Associates. Evan is a former staffer on the Senate Finance Committee, and we are going to be talking today about the Fiscal Cliff Agreement and what that means for charities. So Evan is exceptionally qualified to talk on this subject. So Evan, let's just get right into it. What happened yesterday?
Well, thank you, Allison. Yesterday and the day before, the Senate and the House passed an agreement to avoid the fiscal cliff, and it has major implications on the tax side, especially for higher income taxpayers, because it raises tax rates.
So what's of interest to the charitable community? From what I understand, the charitable deduction was preserved.
That's right. The good news is that there is no deduction cap on the itemized deductions or on charitable contributions. The bad news is that there is a backdoor way of capping itemized deductions known as the Pease limitation.
So we've heard of the Pease limitation before. We have talked about it. What exactly, again, is Pease, and what does it mean?
Well, Pease is named after the congressman who put it into effect a number of years ago, and it still bears his name. It is effectively is a limitation on itemized deductions for taxpayers whose income is above a certain level and who also have itemized deductions.
And that was a tax that was in place prior to the Bush tax cuts. It was eliminated during the Bush tax cuts, and now it is back.
That's right. Only the thresholds have changed.
Okay.
It's not quite as onerous as it was before, but
so what are the thresholds that we're talking about now?
For single individuals, it's $250,000. For married filing joint couples, it's $300,000, and those are indexed for inflation.
Okay. And what would your typical family be looking at in terms of changes to their taxes? Can you just give us an example?
Sure. A simple example might be a joint a husband and wife who have $400,000 of income, and let's assume they have $100,000 of itemized deductions. The computation is made by taking the $400,000 minus the threshold of $300,000, leaving $100,000, which is subject to the 3% reduction. 3% of that $100,000 is $3,000, and that's how much your itemized deductions will be limited by. So those itemized deductions would actually be reduced to $97,000, which means that there'll be $3,000 more that tax has to be paid on.
So Pease is a 3% reduction on your itemized deductions once you're over your $300,000 or your $250,000 if you're single.
That's
so
right.
It's worth 3%, and it doesn't matter what your income is above that. If you made $10 billion, it's still at 3%.
That's right. And in the case of the family I mentioned, the hypothetical family, it would be about $990 more in federal tax for that year. Interesting,
and then it goes up depending on whatever income level you're at. Interesting. What is this going to mean as far as charitable giving? Why should we be concerned about this?
We don't know for sure yet, but I think it's reasonable to assume that to the extent that you don't get as much of a tax deduction for charitable contributions, there may be less willingness on the part of donors to donate. We'll have to see exactly what the effect is, but it's not a positive effect.
So it seems like this is a done deal. Why should we continue following this?
Well, it's possible that this could be revisited later. We don't know that in tax reform, as members try to find new ways to raise revenue, they could take a look at this and decide to lower the thresholds or raise the percentage and end up raising money that way. It's an excellent way to raise taxes on somebody without making it seem like you're raising taxes. It's very much a backdoor tax increase.
Well, very interesting. We'll definitely have to keep our eye on this one. Thanks so much, Evan, for joining us.
Thanks. Let me be with you.